So there was an article that I spotted in the Telegraph a while back, and the title of the article was "Jobs That Could Stop You Getting a Mortgage." Now, if you read the article, or you saw an article of that title, it's natural if you felt a little bit panicked or curious, maybe to think, okay, well, am I in one of these jobs that could potentially mean that I can't get a mortgage? And I thought it's worthwhile having a conversation because the Telegraph did a really good job at painting the scene, giving a little bit of background around why it is and what type of jobs could potentially get you into the situation. But I do think it's worthwhile digging into a little bit deeper as to why is it so, and more importantly, what can you do to make sure that if you are in one of these jobs, you have some provisions to give yourself the best chance of getting onto the mortgage. That's what we want to talk about. So let's jump straight into it. So the article basically lists firefighters, police officers, construction workers, and they're saying that they are least likely to qualify for a 40-year mortgage. This is what a broker, so a mortgage advisor, warned. Now, we'll come back to the point of a 40-year mortgage here, okay? Because we've spoken about why 40-year mortgages are a thing now in previous videos, but we'll circle back to this. But basically, the reason why these jobs are being classed as ones that may mean that you struggle to get on the property ladder or even get a mortgage is because those jobs tend to have a lower retirement age. So people typically retiring age 54, 55. And the reality is if you do retire age 54, 55, if you look at the life expectancy numbers, you're probably going to live as a male to, I think it's like 82 or something like that now. Female, probably a little bit longer, right? And if you retire at 55 or 54, that's potentially 20 odd years that you're going to need to fund your lifestyle with. And if you have a mortgage at the time, it makes sense that the mortgage providers are asking, how are you going to fund this? Now, naturally, it doesn't take into this consideration that people may switch jobs, change careers at 54, 55. It doesn't take that into consideration. And the reality is anything could happen, right? You might earn more money, you might earn less money, but they have no way of knowing at the point of writing the mortgage. So remember, when these guys are writing mortgages, what they're doing is they're trying to mitigate risk, okay? And the risk of you potentially being in a job where you might retire at 54, 55, especially if the mortgage is going to take you into your 70s, they want to know what you've got in place to provide for the mortgage payments and your lifestyle to minimize their risk. That's the fundamental thinking behind the way mortgages are essentially written. Now, we've spoken about this 40-year mortgage thing, right? And a few weeks ago, I made a video which examined, or at least tried to find out, what the average age of a first-time buyer is here in the UK. In that video, I compared us to the likes of Germany and some other parts in the world. And when we look across Europe, the age of a first-time buyer is now pretty high, actually, when you consider what it used to be 20, 30 odd years ago. And according to this article right here in the Telegraph, they're saying that the average age of a first-time buyer is now over 40. Now, in the video that I made, I found data that suggested it was 36. They're saying that the average age of a first-time buyer, and this is in 2022, by the way, was 40 years old. Now, naturally, if you're 40 years old, you're probably taking out a mortgage. You're not going to take a mortgage for 20 years or 25 years because a lot of the time, it doesn't make sense in terms of your affordability on a monthly basis. So what typically happens is people will stretch their mortgage term to 30, 40 years to make the monthly payments a little bit lower so they can actually get on the property ladder in the first place. Because the alternative is, if you can't do that, you've got to find a larger deposit. And we all know how much of an issue saving for a large deposit is for many people in today's age. So this 40-year mortgage, 35, 40-year mortgage is very, very popular now. And that means if you're taking out the mortgage at, 40, right, that means you potentially have a mortgage all the way up until you're 80, which, if you're a lender, is going to be a pretty big concern for you. And it's going to be a big concern for you personally, because who really wants to have a mortgage well into retirement, 70, 75, 80? I would suggest no one, really. You'll want to be able to pay off your mortgage as soon as you possibly can. Now, it's interesting because this is against the backdrop of low interest rates. You know better than I do, right? You have been in mortgages, or you've witnessed people, you've heard about mortgages that have been in the 1% mark. I just want to find a data point that was mentioned in this article right here. And it looked at the average mortgage rates. And it says here that at the end of 2021, the average fixed rate mortgage had an interest rate of just 1.94%, according to data from the Office of National Statistics. Now, if you fast forward to this year, the average 2-year fixed rate on a 75% loan to value was around about 5.89%. On a 5-year fixed, it was 5.39%, which is a pretty big, significant jump from where we were to where we are right now. And this exacerbates this issue of, well, if you find yourself in a role like being a police officer or a firefighter or a construction worker, you're extending the mortgage to 30, 40 years to make it more affordable monthly. But higher interest rates mean that sometimes the affordability may not work, and you're pushing the limits as much as you possibly can to make the mortgage payments work so you can actually get on the property ladder and actually acquire an asset that over time will be, I would argue, one of your biggest assets if you're just a normal person. So there's a whole concoction of things that are working together that make this a really, really interesting kind of like topic indeed. Now, this brings us to, what do the mortgage lenders typically ask for? Now, I used to be a mortgage broker. I haven't written any mortgages now for some time, but typically what they would be looking for is they'll be looking for, what pension provisions do you have? And this brings us into the conversation that we speak a lot about here on this channel, and that is being prepared when it comes to your pension provisions, whether it be through your workplace pension or whether it be via SIPs or private pensions, personal pensions for the future. Because in this scenario where you might have someone who may be a police officer, for example, and it's deemed, well, retirement age for that kind of profession is 55 years old, they'll say, well, what pension do you have? Now, if you're a police officer, you can have a pretty decent civil service pension. Now, if you're a construction worker, maybe that won't be the case for you. And it's even more reason why you need to make sure that you're paying into a workplace pension or maybe a private pension or both, to ensure that you can demonstrate that I have some kind of pension pot which is growing to help me sustain my livelihood if I do retire age 55. Now, there are lots of assumptions within this, okay? And in reality, is this likely going to be something that will hinder you from a practical point of view? I think that if you are kind of in your 30s or so, and you're lucky enough to get on the property ladder, and you're in that kind of profession, you should be okay. When this becomes an issue from a mortgage writing point of view is the closer you are to this deemed retirement age, right? So if you're 45, they're definitely going to ask you the question. If you are remortgaging even, and you're remortgaging, and let's just say your retirement age is, say, 65. So taking this out of the context of just those jobs. This could be for any person with any job. If your retirement age is 65 and they have that on your mortgage application, because you do have to specify, and let's just say you are now age 58, 59, they're going to be asking you for, what are your provisions if you want to continue with a mortgage later on into life? They want to know that they're covering their risk, their downside essentially. So look, I know it's circled back to pensions, but it is a really important element of our financial planning. And it's a really important element to the things that we need to have in place to ensure that we can continue with our livelihoods. A lot of people think that pensions are a scam, it's a waste of time. Alternatively, an investment portfolio of some kind will also suffice. So you don't necessarily have to just do a pension. I think you do a pension anyway, especially if you're employed, because it's free money from your employer and also from the government. But having some kind of vehicle that you can demonstrate can be used to pay your mortgage and pay for your livelihood is going to be really, really important if you find yourself in a situation where you're having this kind of conversation with a mortgage broker. What they're effectively looking for is to protect their downside. So the more you have to show, the more you have to evidence, the better chance you're going to give yourself. Let me know what you think in the comment section down below. Do you think that it's unreasonable for mortgage lenders to kind of have this kind of view and ask you, well, you might be 10 years from it or even 15 years from it if you're 40, but are they justified in asking, well, how are you going to fund this past 55, 54, if they believe that potentially you're in a role that has a track record of early retirement? Let me know down below. Thank you so much for watching. I'll catch you later on.